Today's the 25th. No. All right, almost ready, almost ready. Give me a minute or two. Getting the ball started. All right. Oh, come on. There we go. All right. Okay, live, and live. One more to go. That's it, just one. And this one is good to go. Also, good to go. Alrighty, getting ready to start it. Let's get the ball rolling. Let's see who's in the house tonight. Dale, Mano, James, William Johnson, Kimberly, Swamp Thing, Long Tran, David Cohen, Ty Bomb, Sophie, Crystal Ball, Banned Again, Banned Again, gotta love it. Bitu, Mark Davis, Kevin, what's happening, Kevin? Zach, Banjo Kino, James King Kong Trade, how are you? Cassie, Travis Hunt, Terry, Gordon Shumway, Leo G, Frank White, Swamp Thing, New Ventures, Robert Brown II. What's happening, Mr. Brown? How are you today? Betty, Henry Jason, Just Me Again, William Johnson, Mano Meta, Jeffrey Meehan. Okay, Bitu wants to take a look at DraftKings. Dr. Jason, what's happening, Dr. Jason? For the love of jazz, gotta love me some good jazz. Damn it. I don't have my Alexa, so I can't play any smooth jazz for you. Eskimo Joe, Tony, Jeffrey Freeman, DM Rags, what's happening? Eskimo Joe, Vino, JD Skies. Oh, is that King with a K? King Reed, Michael Warner, Derek, Pat Murphy. Vino. Top earning. Top of the evening to you, sir. Good evening. Derek, what's up? Crypto Scientist. Duke, good afternoon. After Hour Riot. Hey, Billionaire Scarlet. Austin, what's happening, Austin? Freckle Queen, back again, I see. Terry Sook wants to take a look at Hormel. We'll take a look at Hormel in a bit. All right, what do we have down here? Antonio, how you doing? Mr. Steve, good evening. All right, so we're going to top of the evening to all of you. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I'm looking for a simple, safe, predictable, consistent 1% per week. I know it's boring as hell. Who wants to invest for 1%? Really? Come on. Sorry, I'm 62, I'm retired, I don't have the luxury of being wrong, which means all my trades have to be safe, predictable, and consistent. If you're looking for more than 1% a week, you're definitely in the wrong place. This is not get rich quick, this is slow as hell. Narpy, okay. Tongue, okay, interesting. Phenomenal Phil, I do this and trade futures. Futures are amazing. Phenomenal Phil, tell me, what do you know of the Commitment of Traders report when it comes to futures? Kissable. Interesting name, Kissable. All right, so Bit2 is first. He wants to take a look at DraftKings. I don't know why. DraftKings have not been around that long. DKNG. DKNG. Here we go. DraftKings. What do we got for DraftKings? Now, when you watch what I'm doing, it's simple. It's A, B, C, 1, 2, 3. You mean open interest. No, Phenomenal Phil. I mean Commitment of Traders report. If you trade futures, you should know what commitment of traders report is. Okay, and if you don't, you really, really should know what it is. Okay, now I did futures before. Yep, Utilico knows. Commitment of traders report. It's extremely enlightening if you want to trade futures. Okay, so DraftKings, let's take a look. Here's the high of the year. Here's the low of the year. Here's where it was a year ago. Here's where we are now. Look at the motion. Down, up, down, up, down. Well, alrighty then. I got to change this because that looks terrible. All right, look what's happening right here. Down, now she's going back up again. I like that. 22.93. Sorry, 22.94 is the current price. All right, it's a publication. Yeah, I know what it is. Phil, I find futures easier to trade than stocks seasonal. You're right. And it tells the open interest. It tells you where the big boys are spending their money. Okay? Look at it this way. Okay? If you got 80% going long and 20% going short, what does that tell you? Okay? If you got 50% going long and 50% going short, what does that tell you? So the commitment of traders reports tells you what all the big boys are going to do with their money. Because they have to. Not because they want to, because the big boys, you know, like Procter & Gamble, General Mills, Nabisco, these companies have to have sugar, have to have flour, have to have this, have to have that in order to keep producing their products. So the commitment of traders report just gives you an idea where the money is flowing. All right. DraftKings bouncing up. The 23s go for 91. That's more than 4%. Let's take a look. Let's take a close look at it. Okay, a year ago, we're at 42.72. We dropped, retraced, and found the high at 48.64, and that was in the end of August. Well, we bottomed out just recently. Look at the last 30 days. The last 30 days, got the 30-day high here. We got a quadruple top right there. She drops, here's the bottom, shoots up, pulls back, now she's going back up again. Here's your 2 days to the top side right there. So yeah, it looks good. Let's check out. So TSL puts yesterday, and they basically went zero. Woohoo! Nice going, Phil. Good to hear it. All right, so I like it at 22.94. So if I'm buying it at 22.94, I want to sell the 23s and pick up 91 because it's going to be over. And only if you like DraftKings. What do you think, Betu? Let's get rid of this. Let's change this from single to covered. Who do we have there? Was there a link for this morning? I didn't receive one. Yes, there was a link this morning. You didn't receive it? Sit tight. Don't go anywhere. Okay? If there was a link this morning and you didn't get... No, actually, the link was sent last night. So you should have got it in your email last night, not this morning. All right, we're going to do covered stock. We can get rid of the single and go down to covered. Now, covered basically means it's one of the safest trades there is. You're actually covered because you actually have something... like Wet Sir shared the live. Okay, thank you, Wet Sir. So we're looking for this one right there. Let's do this, see what it looks like, see what it sounds like, and see if it makes sense. And it's always going to come back to the same question. Do I like this company? Do I want to own it? Let's keep on going. The 23, there it is right there. One contract. We got some movement down here. What do we got? Hey, Rock Jersey, what's happening? Okay. Confirm and send. Here's the order. This is what it looks like. This is what it should sound like. Now, tomorrow's Thursday, and then we got Friday. So we're not looking anymore at trades for this week. We're looking at trades for next week. Cause Kramer, what's happening? I'm going to call you Kramer from now on. Cousin Astro, what's happening? One covered call, DraftKings, DKNG. 6 March, which is not this coming Friday, but next Friday. And then we get the 23 call option. Okay, well, our profit's going to be 98. Our investment's going to be 2,200. Let's see what type of rate of return we can get. Because I don't know about you guys, I'm looking at 1%, simply, safely, and predictably. Aaron wants to take a look at Alcoa. We'll get to that in a minute. Calculator, here we go. All right, first thing we want to do is put in the profits, 98. And then we're going to divide it by the investment. Well, what is this investment costing us? $2,202. 2202. Okay. All right, so rate of return for this one, 4.4% for 1 week. Think about it. My goal is 1% a week. I just want 1%. This is offering 4. So I'm going to write that one down. DraftKings. DKNG 4.4. All right, so we're going to save this one. This will be number 1 for today. And here it is, DraftKings. All right, all right. Alrighty, so if you don't know, I'm looking for simple, safe, predictable trades, basically on companies that are consistently profitable, which this one's really not. All right, here we go. Monday, Tuesday, Wednesday. This is for Thursday. Come on, there it is. Here we go. Yeah, all right, here we go. All right, so we got DraftKings, 6 March 26th. That's next Friday. That one turned off. I don't like it when they turn off. The $23 call option. Look at what the price of the stock is. $22.92. So 23 is not a bad deal if you think about it. Buy it for $22.92, sell it for 23, pick up 4%. If it's over 23 come Friday, next Friday, I get all my money back and I get to keep the profits. Well, I'm okay with that. $98 per contract, $2,200 per contract. So each contract is going to cost me $2,200. And profit's only 98. And I know you're probably thinking that's not a lot of money. And you're absolutely right, it's not. It's only 4%. Well, I'm only looking for 1%, so I'm pretty much okay with 4%. All right, that being said, let's save this one. I hate it when it does this. Oh well, what else do we got? All right, so Phenomenal Phil sold some Tesla puts yesterday. They basically went to zero. Okay. Thursday, 4.4. Next, what do we got next? All right, next we have TSLA. Whoops, I gotta get rid of this one. Gotta get rid of this one first. Back to single. Back to this. Now let's look at TSLA. Here we go. Alrighty. Let's take a look. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Down, up, down, up. All right. Well, do you like Tesla? Now, see, the one thing I don't like about Tesla is it doesn't have any dividends, which means Tesla doesn't share their profits. You're basically SOL. Think about it. SOL. They don't share their profits. Okay? They go up, they go down, that's about it. Keith the Don. What's happening, Keith the Don? All right, Rock. What's going on, Rock? Okay. Keith the Don wants to look at JEPQ. Now, Keith the Don, I know you're new here. The only reason I know you're new here is because you want to know about JEP piece of crap. That's just my opinion, though. I'm going to show you something about JEPQ. Might change your mind, might not. I don't invest in it because it doesn't pay enough and it's not consistently profitable. So no, hell no for JEPQ. But that's me. I'll show you it and give you my opinion. But I'm letting you know right now, it's going to be a no. That's a no. All right, let's take a look at this. So what's happening right there? We want to look at the current price, 417. And the 417 is going for $10. That's more than 2%. But the thing is, with Tesla, there are no dividends. So there's no predictability and there's no consistency. So do you invest in it? Do you not? It's going to be a call that you got to make. Either you like it or you don't. Well, let's take a look at the last 30 days and see what this thing is doing. Last 30 days. Here you go, last 30 days. High, low, where was it? Where is it? Down, up, down, up. You get 2 days to the upside right there. Boom, boom. So we had all this room to run. So all that space right there is up for grabs. Okay, 30-day high, 30-day bottom. She bounces, comes back for correction, and goes back up again. That's where we are. So 417.40 after hours brings us down to 414.96. We'll look at the 415s. Yep, that works. Let's do Tesla at 415. Now, we said we have to change things up a little bit because there's no getting away from Tesla. He's got so much going on. I'd like to know if anybody has one of those new Tesla phones. Anybody got one of those? I'll be kind of interested in how it works. All right, so we're going to do a covered call on Tesla, 415 right there, one contract. Here we go, and here's the numbers. You ready? Buy one covered call Tesla, 6 March 26, that's next Friday. The 415 call option, okay, the stock at this moment is at 414.90. So 415 is not that far off. Our profit's 1,100. Our investment is 40,000. 40,000. Why is it so much? Tesla stock's $400 a share. What do you think it was going to be? Okay, we got to buy 100 shares. In one contract, Tesla, 40 G's. It is what it is, right? Let's take a look. We take the profit, 1174. We're going to divide it by the investment, 436. Okay, 40, 326 gives us 2.9% for 1 week. So, do you like 2.9%? I do. Okay, let's find this. Let's save this one. There we go. Here we go. Here we go. And there we go. All right, so let's do this. I'm going to try something a little bit different here. There it is. That's not what I want. Okay. Let's see if this works. Tesla. No, that don't work. What the hell was that? Let's try something else. TSLL, 6 March, 415 call option, 1174 the profit, 40,000 is the investment. 2.9%. 2.9%. If you like Tesla, does it make sense? What do we have here? Mighty bargain. Did my first covered call trade this morning for 7.5. Thanks for making things so simple and clear. Oh, freaking awesome, dude. Nicely done. Now, I'm kind of curious, what did you buy and what did you sell? I'm curious, what did you do? Mighty bargain. Okay, nice for you. Nice going. Awesome. All right, so what else we got? So we're going to save this one, 2.9. $2.9. Now, the only reason I asked, what did you buy? Because I want to take a look at it and see if other people agree with what you did. That's all. All right, what else do we got? What else do we got? All right. Kevin, viva la France. Kevin, viva la France. Uh-oh. Uh-oh. Missed all these questions. Here we go, right here. Wow, missed all these questions. Francisco, how you doing? Raider, how are you? Leader, Geo. CGEM. Moody. Living Farm. Frank, what's going on, Frank? Jack Klausner. They call me Lulu. Hey, Lulu. Paul Dickens. Zellian. Papa Bell. What's happening there, Papa Bell? Shannon McLean, how are you? Bobby D. Bobby D's in the house. Yo, Bobby D. What's going on, Bobby D? American Crafts. Shori. Maher. What's going on? ABC 123. Okay. Charlie Mack. What's going on? Chris. All right. Steve Fitz. Rick. Get it how you live. Get it how you live. Okay. Marcus Hart. How you doing? Honey Badger. Ray G. Mario. Tony. Breakdown trading strategies for the stock, DraftKings and Tesla. Okay, Nick James, Discipline, Applesauce, how you going? DJ, Alex, Mert, Jack, Michael, E. Capitan, oh, El Capitan, Tom Anderson, Mr. Anderson. Nice to see you, Mr. Anderson. Jesus. Ryan Toner. Okay, Ryan, how you doing? Joey V. Credist no dentant. Okay, whatever. Determined. Guppy Face. Floorman Sands. MVR. Dave Miles. El Capitan. Good evening. Just here. Ron Cheney. Jake. Wow, there's a lot of guys here tonight. A lot of people. Oh, check this out. Uh-oh, wait a minute. Right there. Just me. Pete. Pete, how's it going? Pete wants to take a look at DEN-F. Wait a minute, DFEN. All right, DFEN, we'll take a look at that. What if I prefer gambling earnings? All right, Delta. Where we go? All right, mighty. Oscar's house, how you doing? Cotton. Ooh, Cotton wants to take a look at Owl. All right, we'll take a look at that in a second. B. Dixon, Dynex Capital. You really got to give me the ticker symbol, dude. Never heard of that. Okay? All right, so Tesla we already did. Next is going to be DFEN. DFEN. What do we have down here? JEPQ. All right, just me, Pete. You see this here, Pete? What do we have here, Pete? This is called March. April, July, October. Those are months of the year. That means that is a monthly optionable stock. I don't do monthlies, they just don't pay the same. Lack of better words, waste of my time. Sorry, I don't like it. I don't do it. Cotton Express wants to take a look at OWL. OWL. Okay, ready? OWL. 1135. The high, the low, where was it? Where is it? Look at it. Down, up, down, up, down, up. We're at 1135. We're bouncing off the bottom of the year. The bottom of the year. OWL, check it out. I mean, sorry. Cotton, check it out. The bottom of the year is right there. And it dropped. Now she's going back up again. So let's zoom in a little bit and see, does it make sense? Here's the last 30 days. Your 30-day high drops. Now she's going back up again. 1135, I've been looking at the 1150s, and they're going for 35, which is over 3%. And here's the catch. Do you like OWL? OWL. What is it? Blue Owl Capital. You either like it or you don't like it. It's actually that simple. I like it or I don't like it. Let's check it out. Alrighty, 1167, we'll do the 1150s, all right. Go to the single, go to covered call, there it is, the 1150, there it is. Here we go, one contract, there it is, and here's Johnny by one covered call, OWL, OWL. 6 March 26th, that's next Friday. The 1150 call option, the stock is currently at 1167. So I'm selling it for less. Here's the funny thing. If I buy it tomorrow at 1167 and I sell it for less than what I paid for it, 1150, I'm walking away with a profit. How can that be? $45 off an $1,100 investment. Now, I know it doesn't mean anything at the moment, but let's do a little bit of math to find out what my rate of return is for 1 week. Now, you guys, for those of you that are new here, and there are some newbies, I've seen some of the stuff you want me to take a look at. For some of you new people, you may not know this, but 1% a week is over 50% by the end of the year. Now, I don't know how to say this more eloquently than just blurting it out. The trading strategy that I'm showing you right now was created for my 9-year-old daughter. Back in 2008, she said, "Daddy, what are you doing? Can you teach me?" So to teach a 9-year-old, it's got to be simple, it's got to be safe, predictable, consistent, and no way for her to lose. So there was 5 simple rules for the 9-year-old. Hold on a second. Now, for my 9-year-old daughter, we came up with 5 rules. Rule number 1, now these are relatively simple. You can write them down if you want. You really don't need to because they're actually that simple. Rule number 1 would be never buy something you don't want to own or you don't understand. If you don't understand who they are, what they do, when they have dividends, when they don't have dividends, if they're profitable, if they're not profitable, if you do not know that, you should not be buying it. You should never buy something you don't know and you don't understand and you don't want to hold on to. Simple. Never buy something you don't want to hold on to. Number 2, never sell at a loss. It defeats the purpose of the game. And do not kid yourself, this is a game. It's an adult game with adult consequences, which means you can lose everything if you don't pay attention to what you're doing. You can lose money. And most likely, you will at some point. The idea is knowing what the risks are going in and preparing yourself so you don't make any mistakes, so that you only buy good quality companies, that you only do good quality, strong, strategically thought out trades so that you are consistently profitable week after week after week. Now, what we're doing here is totally different than anything you've ever seen before. Because most people just buy stocks to hold on to them for decades. Buy it, hold on to it, collect the dividend every 90 days. That's what most people do. Well, here we do it a little bit differently. We like to collect the dividends, fine, but why not, for the fun of it, sell covered calls in the meantime while we're waiting for those dividends? And if just so happens to hit my target before I collect the dividends, I'll walk away with a profit. Because I'm not you'll like this one, you ready? I am not monogamous to any company. That means I will buy Owl, I will take my 4% profit, I will get rid of it, and I will go to something else. There's nothing I've ever bought that I've held on to for longer than 18 months. And the only reason I held on to it for 18 months, every single week for 18 months. Do you have any idea how long 18 months is? 12 months is 52 weeks. So 52 and 26, that's 78. 78 weeks, 18 months, 78 weeks, this company gave me 1 or 2% every single week. So why would I get rid of it? So like I said, I'll buy it, get that 4%, move on. Because I'm not looking to hold on to anything. Okay. Rule 1, never buy something you don't want to hold. Rule 2, never sell at a loss. Rule 3, make sure the company is consistently profitable. Now, I say that, and most of you are probably thinking, that makes common sense. It does, but you'll be surprised at who buys what and why they're buying it. Like Defend. Now, don't get me wrong, Just Pete, okay? It doesn't make sense to me. The numbers don't make sense. It's a no, I wouldn't buy it. Plain and simple. Rule number 4. Pete, weekly options only. Okay, there's 10,934 stocks. We check every week. Every week we go and we check how many new stocks have they added. So as of this week, 10,934 companies. That's a lot. Now, I only get it 300 because only 300 fit what I'm looking for. All right, that being said, 45 to 111, what is it, 1100? Let's check it out. Clear that. The profit's $45. Ooh, wait a second. Rule 5. Remember, Rule 4, weekly options only. Rule 5 is make sure all the numbers work. Remember I said about the numbers? What am I buying it for? What am I selling? What am I collecting? Is it more than 1%? Well, let's find out. The profit on this one's $45. It's right there. Max profit, $45. Cost of the trade, including commissions and fees, $11.05. Well, let's find out. $11.05, and that gives me 4% on out. Didn't we already do this one? 4%. Well, we're going to save this one too. Did I do this one already? Sounds familiar. We'll soon find out, won't we? No, it's not up there. So 4% makes sense to me. But I have no idea who OWL is. OWL, 6 March, that's next week, 11.50 is the strike price. Look at the price of the stock, 11.45. If I'm buying 11.45, selling 11.50, I'm going to pick up a whopping $45. Whoopee! Not the point. The point is $45 is the profit. The investment's only $1,100. That makes it 4% return for 1 week. Remember, there's 52 weeks in the year. No, 52 weeks in the year. All right, so it's 52 weeks in the year. This week, for OWL, 4%. If you like the company. And it's always going to come back to that. The simple questions. Who's that? Katie Allen, how are you doing today? So the simple questions are relatively simple. Number one, does it make sense? Number two, do I like this company? Number three, do I like this company at this price, $11.45? It's either a yes or no. Either you like it or you don't like it. All right, so we're going to save this one, 4%. Two more. Let's come up with two more. 5 a night. Let's come up with 5 every single night. Okay, Dynex Capital, B. Dixon. I have no idea what that is. The Nest Restaurant, Coin. Isn't Coin like Coinbase? Don't they like have no dividends? Back to the beginning. C-O-I-N, Coin. Coinbase. Okay, so here's Coinbase. Here's the top. Here's the bottom. Here's where it was a year ago. Okay, right there. Here's where it is now. Look at the motion. Down, up, down, up. Simple. 183.94. So we'll be looking at the 185s. And that's paying $8. You know what that means? That means this baby has no dividends at all. They're not sharing their profits. Is it an opportunity? Yeah, it is. As the high of the year, here's the bottom of the year. Now she's going back up again. You either like the company or you don't like the company. Plain and simple. It's like, do you trust these people with your money or do you not trust these people with your money? That's it. I mean, is the people in charge at the company, are they doing the right work? Are they consistently profitable? Are they sharing their profits? Well, Coinbase doesn't have any dividends. Let's look at the last 30 days. Okay, here's our last 30 days. 30 days ago is the high. Then we drop, go back up, a little pullback. Now she's going back up again. But look at all the space we have here. She is definitely going back up. But look at all that space. The 185s right there paying $8. Well, let's see what that looks like. Now, normally I wouldn't do Coinbase because it doesn't have any dividends. But the Nest Restaurant wants to take a look. Well, let's take a gander. Okay, covered stock, the 181s. Let's do the 182. No, the 180s. Yeah, 180s. Why not? I like safe trades. All right, here we go. One contract, Coinbase. One covered call, Coin, C-O-I-N. 6 March, that's next Friday. The 180. Right now it's going for 181, but we're going to sell the 180s. And we're going to pick up 897. 17 grand. Let's check it out. What rate of return are we looking at? Now remember, I'm looking for 1% a week because 1% a week is over 50% per year. And I'm pretty much okay with 50% per year. We did have somebody last night who didn't think 1% a week is possible. But he changed his tune by the end of the night. All right. One covered call, 6 March, 180, 897. That's the profit right there. Let's get the calculator. What rate of return is that? Okay. Rate of return, here we go. 897, and we're going to divide it by the investment. The investment here, 17,000. Divide 17,103, grand total of 5.2. Yeah, 5.2% for 1 week. Let's check it out. All right, let's get rid of this. Let's say this one, 5.2, hell yeah. But do you like Coinbase? That's always a tough question. You either like it or you don't like it. It's that simple. All right, we're going to go check out that one in a second. Hold on. Where is it? Where is it? There it is right there. There it is. Coin, 6 March, the 26 option. 897 is the profit, 17,000 is the investment. Anytime you make any investment, you're going to have some type of rate of return. It's either going to be positive or it's going to be negative. So if you have the choice, wouldn't it make sense to find something that's going to be positive as opposed to something that's going to be negative? I haven't forgotten about you. We're going to look at JEPQ next. All right, let's finish up this one. 5%. Holy cow. 5.2 as a matter of fact. 5.2. I like that, 5.2. All right, so somebody wants to take a look at JEPQ. Why? Why that? See, I do get a little perturbed, when I look at some things, and I think to myself, how can somebody in their right mind sell a piece of crap like that? Because there's so many other choices that you could make that are better. So why would you do it? All right, let's go back to the beginning. And now we're going to go to Yahoo Finance. The reason why we're going to Yahoo Finance is to take a look at the profitability of JEPQ. Because apparently, Key the Don thinks that JEPQ is a good investment. All right. I'm not trying to make you feel bad or anything. Okay, Key the Don. JEPQ. All right, you ready, Key the Don? Here we go. JP Morgan, NASDAQ Equity Premium Income ETF, JEPQ. This is what you wanted to see. Now, what we're looking at is the data stream. Here's the dates. Here's the opening price of the day, the closing price of the day, the low, the close, the adjustment, and the volume. Sorry, that's the high, the low. Open, high, low, close, adjusted, volume. It's all there, all the numbers. The numbers I want to see specifically are the dividends. And the reason, Key the Don, I want to look at the dividends, because a dividend, hold on, right there, the dividend is a portion of the company's profits that they give back to the investors. Let me say it again. The dividend is the portion of the company's profits they give back to me and you, the investors. So when we invest in dividend stock companies, if they're profitable, we are entitled to a portion of those profits, and that's what we want to look at right now. So, Key the Don, here we go. JEPQ, here are your dividends. You ready? I'm going to read them to you, and then you can tell me whether or not it's consistently profitable, or every once in a while, does it go down in profits? Because what I'm looking for is higher, 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 higher. I want consistency of increased profits. Every single month, week, or year, I want that number to go higher and higher. And I'm going to show you some samples of companies that actually do it, because there's over 300 of them. Let's check this out. You ready? All the way back to the beginning, I want 2 decades. Now, you do know that 2 decades is 10, 20 years. So 20 years ago would be 2006. But we got a minor problem with JEPQ. Would you like to know what it is? 2022. 2022 was the very first dividend. That's only 4 years. You're putting your money into a 4-year-old company. 4 years old. 4. I'm looking for 10, 20. 20 years of consistent profits. Now, you may not know this, but the stock market has been around for over 4 120 years. 1602 was the very first dividend stock, VOC. 1602, the very first dividend stock. It was a simple promise. If you invest in our company, if you give us your money, if you invest with us, we promise to share our profits with you. That was the original dividend stock promise. Invest in our company, we'll share our profits. Well, the VOC paid 18% for about 198 years before they finally went belly up. Why they go belly up? Corruption and mismanagement. You give people in power a blank checkbook, yeah, they're going to take advantage of it and they're going to screw it up. Look what's happening in the United States. You give the power of the checkbook to Congress, they're going to screw it up. Yeah, it's great until you run out of other people's money. Anyway, let's check this out. So, 4 years. 4 years. Key the Don. 4, that's it. All right, let's take a look at the numbers. You ready? 37, 34. Hold it, we're going to stop right there. Okay, stop right there. Time out. 37 to 34. That's going backwards. The very first dividend was 37.6. The second dividend was 34. That's going backwards. How could you start out with a company, the very first dividend, okay, and then the second one is lower? Did they lose money the very first week, very first month? Let's check it out. Hold on. 37, 34, lower. 40, higher. 54, higher. 38, lower. 68, higher. 54, lower. 57, higher. 44, lower. 43, lower. Do you see the pattern here? Up, down, up, down, up, down, down, up. Yeah. No consistency whatsoever, Key the Don. But hold on. It actually gets worse. It really does. Watch. All right. 2023, 43. 43 right there. 45 higher. 48 higher. 35 lower. 36 higher. 36 lower. 45 higher. 41 lower. 48, 41 higher. 42 higher. 39 lower. 34 lower. 30. Okay, no. Up, down, up, down, up, down. No, no, hell no. You want to see what consistency of profitability looks like? Check this out. GPC. Here we go. No, we want to look at all. No, we don't. We want to look at some of the profits. We only look at 2 decades. 2 decades goes back to 2006. All right. You ready, Key the Dawn? This is what it should look like. Pay attention. You ready? 2006, 33. 2007, 36. 2008, 39. 2009, 40. 41, 45, 49, 53. 57, 61, 65. 67, 72, 76, 79, 81, 89, 95, $1, $1.03. Did you notice every single year that number went higher, 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 higher? Every single year. GPC, Genuine Parts Corporation, 7. Count them. Key the Dawn. 7 decades of consistent profits. JEPQ, 4 years, up, down, up, down, up, down, no consistency whatsoever. Hell no. There's 300 companies that are consistently profitable for at least 2 decades. Why would you put your money into a 4-year-old company? It's 4 years old. Do the numbers. Remember what I said? Make rule number 3, make sure the company's consistently profitable. You missed that part. There's nothing wrong with it. See, I don't judge anybody by what they pick. You want to put your money in JEPQ? Hey, more power to you. I'm just saying I wouldn't do it. I wouldn't put money into JEPQ. I would invest your money into it because it's not consistently profitable. No. Why? There's 10,934 stocks. Why put it into a 4-year-old stock that is not consistently profitable? It makes no sense to me, yet people do it every single day. There's nothing wrong with it. Someone's got to invest in it. Someone's got to give them their money. It's not going to be me. Let's see, what do we have next? Key the Dawn wants to jump over to ExxonMobil. Now, ExxonMobil makes more sense. XOM, but not this week. Okay, reason why not this week. Here's the high of the year right there. She dropped, now she's going sideways. No real direction whatsoever. Give it some time. Let it drop down a little bit more. Rock Jersey, James, do you use Thinkorswim for trading or just research? Didn't see your answer yesterday. Oh, okay. I use Thinkorswim. I have six accounts on Thinkorswim, and I got, I think, 1 or 2 accounts on Robinhood. We're going to open up another account for my grandson on Robinhood as soon as I get my daughter-in-law in shape, because she doesn't want my grandson to be online, to be center of attention. But I want to show people how simple it can be, how simple it should be. 6-year-old grandson. Sounds like it could work. Besides, every time he's here, he has fun. All right. Seisin Tubi. All right. Good Naji. We want your expertise. Thank you, Good Naji. All pro detailing. Oh, okay. Everything is backwards. You're absolutely correct. Can't pull anything by you. That's a good thing. All right, so what else do we have up here? No questions there. You should buy Solana right now. If you can explain to me in a manner in which I will understand why I should buy Solana right now, and then tell me how often has Solana been consistently profitable, and do they give out 50% or more per year? No? Quiet all of a sudden. Okay, so B. Dixon, you got to give me the ticker symbol for Dynex. Okay, what if I prefer gambling earnings reports? Okay, I have no idea what that means. What if I prefer gambling earnings? AI call for next week. Sam Ben, what is AI? AI is C3AI Inc. Okay, something about that doesn't thrill me. But here we go. The high, the low, where was it? Where is it? Look, it's down, up, down, up, down, up. She's bouncing up the bottom right there, 10:30. After hours, we're at 8:18. The 8s are going for 177. That tells me there's no dividends here either. Okay. Mighty bargain, but Hertz for 452, wrote 6 March for 34. Nicely done. Where do we find 300 stocks consistent? The Kings, the Aristocrats, Champions, and Warren's List overlap a lot. I can only find around 180. That's because you're missing the dividend contenders. There's over 300 dividend contenders. And yeah, a lot of them do overlap. So you're right about that. All right, so Mighty Bargain bought Hertz. All right, let's take a look at Hertz. I actually have some, by the way. HTZ. Hertz. Here we go. Hertz. The high of the low. Where was it? Where is it? Look at this. Down, up, down. We're at 442. Let's take a look at the last 30 days. You're going to have a little bit of an issue here with Hertz. Mighty bargain. Okay, here's our last 30 days. 30-day high, she dropped. Retraced, bounced back down again. Now, we bottomed out on Monday. Tuesday was higher. Today, we had a higher high and a lower low. But it's not as low as Monday was, so just kind of like going sideways at the moment. The 454, the 450 is going for 36. Yeah, that's a nice percent. Let's check it out. Hold on, Mighty Bargain. I'm going to check this bad boy out. I think we did do it yesterday. Okay, the 450, there it is. One contract at 450, there it is. Here we go. Here's Johnny by one covered call. Hertz, HTZ. Mighty Bargain came up with this one. 6 March 26, next Friday, the 450 call option. Well, the stock is going for 454 right now. All it has to do is stay exactly where it is or go up. Think about it. It's at 454. So if I'm buying it at 454, selling it at 450, walking away with $4,500, it's a $400 trade. $400 to make 45. Well, let's check out that rate of return. Calculator, if you don't mind. $45 divided by 405 for the contract gives me 11%. Mighty Bargain. Did you get that? 11%. Holy cow. I'm going to save that one. I'm going to write that one down. I got it written down. Yeah, I got it written down already. All right, so there we go. Here we go. Here we go. And there we go. Here we go. All right. This is number 5. So we're basically done for the night. Yeah! Holy cow, we're done in an hour. We got another hour to go. What do you guys want to take a look at? There it is. Big and bold. Hertz. 6 March. The 450 call. $45. 400 is the investment. This is like one of the best ones we've seen this week. That's a good call there, Mighty Bargain. 11%. We got it yesterday right there. Hertz yesterday and Hertz today. It was 4:30 yesterday, and today it's 4:44. Well, alrighty then. What else do we got? Jay Pizzy. What's going on, Jay Pizzy? Uh-oh. I missed all these questions. Holy cow. Oh, wow. All right, there we go, right here. All right, Nick Mustachia. How you doing, Nick? Hormel and TSL for March 6th. We looked at Hormel yesterday. We looked at TSLL yesterday. Thank you. Sam and losses, how much? Sam, can you elaborate what you're speaking of, if you don't mind? What are we looking at? Blue Owl. Okay. All right, what do we have? A sneaky weasel gig. Tiki-Taki, what's happening? Eagerly one. Hanny, Blue Owl. The company is leveraged up the wazoo. Imagine that. Tanty Belcor, good evening. Weave, C-Dude, C-Dub, what's happening up? Bone, 177. Okay, NPC, good evening. The Christian OG, Owl is still falling, don't buy falling knives. Well, there you go. You hear that one? Vino, Netflix look like it fits. Can you give us thoughts? No dividends, though. I'm well aware that Netflix has no dividends. I very rarely buy it. So let's check it out. Netflix. I usually say no dividends, no thank you. NFLX, Netflix. Here we go. So Netflix, Vino, nice choice there, Mr. Vino. Let's check this out. Here's the high, here's the low, here's where it was, here's where it is. Look at this, down, up, down, up. Here's the bottom of the year right there. Let's zoom in. Okay, 30-day high, 30-day bottom. Now she's going up, 82.70. The 83s are going for 224. That looks like a yes if you like Netflix. If you like it, of course. Terry Hormel, thank you for that. Nello, how are you? Sam Ben. Sam, if you can be more specific, I'll touch on that subject. Oscar's house, how are you? Christian, but what happens when inevitability goes down and you lose $1,000? Okay, Christian, let me see if I can explain this to you in a manner in which you'll understand, because, you seem curious what happens when the stock goes down. All right, Mr. What's his name? Christian. All right, Christian, check this out. You ready? HIMS, H-I-M-S. H-I-M-S. Are you ready? The high, $70. The low, $15. $70 to $15. $70 to $15. Look at the drop. Now, when I say stocks go up, stocks go down, that's all they do, because that's all they do. Okay? Down, up, down, up, down, up, down, up, down, up, down, up, down, up. That's what they do. So check this out. Are you ready? I got HIMS right here. Right click. View trades. All right, you ready? I originally bought HIMS back in December for $52 a share. 52. And now it's down to 15. That's a big drop, 52 to 15. But I dollar cost average on the way down, so now I'm at 24. But here's the thing. I'm in at 24.62. So 1% of 24.62 should be 24, correct? Well, this week I sold the 16s and I picked up 105. It's at 15.82. I sold the 16s, picked up 106 or 105. That's more than 1%, and the stock actually went down. So explain to me why you think I'm wrong by doing a trade like this. Remember, it was at 70, now it's down to 16. Okay, big drop. I sold the 16s, let's zoom in a little closer. Okay, here we are. I sold the 16s, which is right about there, and I still brought in more than 2 or 3%. So you have the opportunity to change your strike price, change your strike dates, because here's something somebody like you doesn't realize. And I want to say it really slowly so you understand what I'm saying. Okay? There's no such thing as a profit or a loss without you consciously deciding to take it. What does that mean? That means I bought the stock at 52, which is way up here. Now it's way down here. Now, yeah, the stock went down, but I didn't choose to sell. The stock dropped from 70 to 15. I didn't choose to sell. Remember rule number 2, never sell at a loss? So if I never sell at a loss, I never lose money. Isn't that correct? Okay, it was at 70, now it's at 15. Did I sell it? No, I didn't. I dropped my strike price and I changed my strike date. By doing that, it allows me to stay in the game a little longer and still have money coming in. Because rule number one is never buy something you don't want to own. I got no problem owning on to HIMS. And then rule number two is never sell at a loss. I have no intention to sell it, even though it's a hell of a lot less than what I paid for it. So remember that, Christian. It's not a profit until you take it. It's not a loss until you agree to take it. Just because the stock goes down, you still own it. You are the one who's in control. You either sell it for a loss and say, all right, I lost, or you don't sell it for a loss and say, it's down a little bit, big deal. Because what do stocks do? If you take a quick look, you'll see. They go down, they go up. 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 They go down. What do you think is going to come next? It's going to go back up again. How far up? We don't know. How far down? We don't know. Okay, we're here to make money, so you got to try to find a strategy that works for you. If you're afraid of losing money and you think that way, you shouldn't be playing this game. Because if you buy it at 70, it drops to 15, and you say, you know what, I'm going to take my loss and I'm going to walk away, that's your call. And you have every right to do that. But how many shares do I even have of that damn thing? Okay. 15, I got about 2,000 shares. Okay, so I got about 2,000 shares. So whether I bought at 2,000 shares at 70 or whether I bought them at 15 is totally irrelevant. Because, see, I don't pay attention to the stock price. I pay attention to what I bought the stock for. So I bought the stock for cash flow. So I have about 2,000 shares. So whether it goes up or whether it goes down, I really don't care. My concern is, what can I sell them for? Okay? In the money, at the money, out of the money. I take a look at the numbers. What are the numbers telling me? Well, currently stock's at 1568. I can sell the 17s and pick up 51. That's more than 1%. I can sell the 18s, pick up 29. That's more than 1%. I can go 1, 2, 3, 4, 5 strikes out of the money. That means there's a lot more wiggle room. I don't have to sell the strike price for the same price I paid for it. I can sell higher. I can sell lower. I can sell any one I want. I own the shares. So no, it's never a loss and it's never a profit until you agree to take it. So if the stock goes up, it's not a profit until you take it. If the stock goes down, again, it's not a profit until you agree to it. So if you're worrying about losing $1,000, you probably shouldn't be playing this game. Because nobody can force you to do anything you don't agree to. So as long as I buy the stock and I refuse to sell at a loss, I can write a covered call every single week. That's what I'm looking for. Consistency of cash flow and weekly options. I get 2 criteria and that's it. Consistency of cash, right? Consistency of profitability and cash flow. Wait a minute. Consistency of profitability and weekly options. I'm getting old. Leave me alone. Cut me some break. All right. Show us. Wait a minute. Show us how to track the profits. Oh my goodness. Let's go. La 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 la. Okay, you want to see to track the profits? Who said that one? User 6118. Okay, you ready? Here you go. Can you read that? Can you understand that? Okay. Okay. Sold, 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 sold. Okay. Bought. Okay. Cash balance, sold, sold, sold. Okay. That's just the last 30 days. And that's just one account. Can you read it? Can you understand it? How about the order history? Right there. Okay. Credit, 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 credit. All these credits down here. See, all the green is stock that I bought, and all the red is stuff that I sold, and all credits. Okay, we're in, what week we in? We're in week number 8, week number 9 of the year. I get 0 losses so far this year. 0. Okay, I made about 2,500 trades last year, and I got 4 losses last year. 4 losses out of 2,500 shares. I think that's pretty, 2,500 trades. I think that's pretty damn good. Sandy, AVGO. I'm going to say no to that right now. There's a reason why I'm saying no to AVGO. Okay. Can only find around 180 stocks. You can only find 180 stocks. All right. Who said that one? What? Track record. Who said they can only find 100 and something stocks? That's impressive. Always learning something new. Watching. Thank you there, Mr. Mike. Okay. So here we go. C-Dub. We're so fine 300 that are consistent. Blah, 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 blah. A lot. I can only find around 180. Okay, who said this? C-Dub. C-Dub, are you ready? You can't read it, but it's right here. There are approximately 335 to 370 companies classified as dividend contenders, which are defined as companies that have raised their annual dividends from 10 to 24 years. There's 335 to 370 of them. And you can only, you're looking in the wrong place. It's right. I'm sorry you can't see it, but it's right there. $335 dividend contenders. You're looking in the wrong place. Go to Google. Okay? Here we go. Here we go. Check this out. Dividend tenders list 2026. There it is right there. Okay? Here it is right there. Okay? Dividend contenders list 2026 right there. Right here. Okay? Dividend contenders list right there. Oh, here it is again. Dividend contenders list. Okay? Sure dividend contenders list. Oh, InfraCap Fund. Dividend contenders list. Dividend contenders list. It's right there on Google. Okay, it's there. Dividend contenders list 2025. That's impressive. Thank you. Always learning something new, watching your streams. Thank you, Mr. Mike C-Dub. You answered my question earlier. Thank you. Thank you. I missed the contenders. That's probably why you missed them. All right, anyway, what else do we have? Sandy, AVGO. Now, Sandy, I said no to AVGO for a reason. Here we go, AVGO. Here we go, Sandy. Broadcom. Sorry, I was thinking of AGNC. Sorry, AVGO is a yes, AGNC. I get those two mixed up. AGNC, AVGO. Yeah, you see where I can get mixed up? I'm getting old. Leave me alone. Okay, so AVGO. Sorry, that's a yes. Here's the high. Here's the low. Here's where it was. Here's where it is. Look, it's down, up, down, up. We're at 332. The 332 is going for 17. Holy cow, 17? Woohoo! Let's take a look. Last 30 days, 26, here we go. There's no real rhyme or reason to this one. 30 days ago, here's the top, here's the bottom. Look at this, up, down, up, down, up, down, up. It's kind of like going sideways, channeling. You know, channeling, do you know what I mean? Just going one direction. But if you really like it, she seems to be moving up here if you want to do the 332.50s. All right, well, let's take a look at the 332.50s. One contract. Here we go. You ready? One covered call, AVGO, 6 March 26th, next Friday, the 332.50. It's at 332.30. So what's wrong with the 332.50? It's $1,900, 31,000. Remember, anytime you make an investment, whether it's your time, whether it's your energy, whether it's your money, there's going to be some type of return, and it's going to be a positive or a negative. So you got the choice. What is it do you want to do? What makes sense to you? AVGO. Okay? 1,965 is the profit. 31,000 is the investment. So we're investing for weekly cash flow, not monthly, not annually, weekly. There's 52 weeks in a year. And if we get 1% every single week, that's over 50% per year. It just makes sense. So Sandy, AVGO, let's do the math. You ready? 1965 is the profit. Okay? Max profit right there, 1965. The investment, cost of the trade, including commissions and fees, 31,000. Now, you heard me say it earlier. I'm looking for simple, safe, predictable, and consistent. Well, simple is the easiest strategy is buying and selling. That's the easiest. But there's a minor problem with buying and selling. You actually got to wait for the stock to make the move before you can get your profit. And then where is your profit going to be? How do you figure it out? And how long are you going to wait? And are you going to pull out if it goes backwards? Well, I like the covered call. It's not as easy as buying because you're buying and then you turn around and selling at the same time. Buy and sell at the same time. So if I'm buying it first thing in the morning, 30, 32, 31, I'm going to turn around and sell it at 332.50 and collect a profit. Now, safe, remember, simple safe, safety comes in with the federal government has looked at the covered call and deemed it as safe enough for you to do in your retirement account. There's a lot of trades you cannot do in your retirement account, but you can do covered calls. In the simple safe predictable part, the predictable part of the covered call is I know what I'm paying, I know what my return is before I even do it. And then the current price is here and I'm selling it right there. I already know how close it is. And the stock really doesn't even have to move at all for me to get my profits. Let's find out. 1965 divided by 31,285 gives me a rate of return of 6.2. 6.2 for 1 week. What do you think, Sandy? 6.2 for 1 week for AVGO? We're going to save that one. Here we go, right there. 6.2. I like 6.2. And here it is, 6.2. AVGO, 6 March, 322.50. 1,965 is the profit. 31,000 is the investment for a 6.2% for 1 week for AVGO. Now you got to ask yourself that question. Do I like ABGO? Is this a company that I can get behind? Either it is or it isn't. I hate it when it does that, but it does it often. Okay. Chicken Cult, how are you doing? Judifus, good afternoon, Judith. Why not just go for index funds, no worries, and slowly build it up? Christian, I need you to explain to me one index fund that pays 50% or more. One. Hell, tell me one that pays 30%. Christian, you got to remember, investment, risk, reward. I don't do index funds. Number one, they're not consistently profitable. That's number one. And number two, they just don't pay enough. Sorry, I'm used to. Now, Christian, I've been doing this for 30 years. I've been doing this particular strategy for at least 16 years. Okay, I'm used to getting 50% per year. Why would I take less? Think about it. Now, don't get me wrong. Index funds are great for those who don't really care about their money. Say, you know what? 8-10% a year is fine by me. And there's nothing wrong with that at all, Christian. There's nothing wrong with 8 or 10% or even 5 or 4%. It just depends on what you want. I want 50%. I want 1% every week. I want to be in control of my money. I want to choose where my money goes. And I don't mind spending 5 or 10 minutes a day. Because it's called the 10-minute trader for a reason. Okay, she's 9 years old. She said, Daddy, can you teach me? Simple, safe, predictable, consistent, less than 10 minutes a day. That's an hour a week. An hour a week to make 1%, depending on what your account looks like. If you have a couple $100, it's kind of like a waste of time. But you can't get to big numbers without doing the small numbers first. Everybody's got to pay their dues. Okay, you're not going to become a CEO just out of college, unless Daddy, pays for it. Anyway, I forgot what this number was. 6.2. We're going to put it right on top of Hertz. The reason we'll put it on top of Hertz because we got Hertz yesterday. 6.2. So, Christian, I don't mean to pick on you or anything, but think about it. There's nothing wrong with index funds at all if you're okay with those numbers. Dead man running. How do you sell calls without owning the stock? Do you have to have a lot of capital? Now, dead man running, when you're talking about selling call options without owning the stocks, you can do that, but you have to qualify for doing that, and it's called selling naked calls, which means you need a lot of money to be able to do that. Yes, usually that's how selling options works. That's why most people buy options. Okay. Huntington banned shares. Okay. Chris Cathy, you actually got to give me the ticker symbol for Huntington. I never heard of them. Help me understand RBLX calls. Maggie's time. RBLX calls. RBLX calls. Okay. RBLX. Roblox. Okay. Let's see if I can explain it to you in a manner which you'll understand. All right, Maggie? Hold on a second. Here's the high of the year, 150. Here's the bottom at 50. A year ago, we're at 60. Now we're at 68. All right, so just take a look at the numbers for a second. Goes from 60 to 50 to 150 to 60. Now we're at 68. So basically went down, up, down, up. Kind of makes sense, right? So here's where we are now. So Maggie, in order to do a call, whether you're buying the call, selling the call, or a covered call, whatever you want to do, you want to take a look at RBLX. Okay, Look at the last 30 days. Okay? Last 30 days. She went up, she went down. She went up, she went down. Now she's going up again. The interesting thing that I see here is you can see the same thing. A predictable, repeatable pattern. It went up, it went down. It went up, it went down, it went up. How much higher is it going to go before she turns around and comes back down again? Because stocks go up until they're done. And then they turn around and go back down until they're done going down. It's basically that simple. And it's very challenging for some adults to understand that. They think they can buy it at 68 and it's going to go up, up, up and keep going up. It doesn't work that way because you're not the only dancer on the dance floor. There's literally 7,800,000 shares that traded today. Now you're here watching me, so I really seriously don't think you have enough money to buy 7,800,000 shares to change the way things are, because they are the way they are for a reason. Now, RBLX call options gives you the right to buy them at a certain price by a certain date. So just the calls themselves just gives you the opportunity to do something, but you've got to choose what price you want. Okay, the strike price. Okay, that means the price over here. Where do you think it's going to go? Then you got to pick out the date. Do you want to go this Friday, which is 2 days away, next Friday, which is 9 days away, 13 March, which is 16 days away, 20th of March, 23 days away, so on and so forth. You can even go down to December, which is 296 days away. You've got to decide, number one, what call option do you want? Do you want to buy it? Do you want to sell it? What strike price do you want? That means choose. Right now it's at 68.07. Do you want to do the 68s? You want to do the 71s? Okay? You got the 68s, the 71s, the 82s, the 100s. You can do any one of these you want. You've got to decide. And that's the toughest thing. And now I don't even know if you want to buy the options or you want to sell the stock options because you didn't really say. But here's the thing. She went up, she went down, she went up, she went down. Now she's going up again. That's where she is right now at this moment in time. So you've got to decide what makes sense to you. Do you like RBLX? Well, you probably do, or you wouldn't have asked the question. But you want to understand them. Okay, as the stocks go up, the value of the options goes up equal to the amount of the delta, which is over here. Now that gets a whole different kind of can of worms because it can get very complicated. But right at the moment, we're at 68.07. The 68 is going for $3.10 per share if I want to buy it. So if you want to buy it, it has to go 310, 71.10. So if you buy this now, it's got to go to $71.10 just to break even. Just to break even. That's not even including the profit. Okay, so an option, when you buy it, you're buying this price here. And as the stock price goes up, you got to pick the right date. Because you could be right on the price and be wrong on the date and lose money. But you could be right on the date and be wrong on the price. See, buying and selling options is not that easy. That's why I do covered calls, because they're simpler and they're safer. Granted, they only make 1 or 2% a week, but well, you have to pick and choose. Do you want profitability? Do you want consistency? Or do you want to get rich quick? And that's a question you have to ask yourself. What do you want? Okay, now I don't buy options, I only sell them. Because 80% of all options expire worthless. So why would I want to buy them? Anyway, next question. I hope that answered your question, by the way. Chris, Kathy, how are you? Observer, thank you. Maggie's time, we did that one. Drew, Observer, Sandy, sounds good. Kadrina Curry, real estate. Oh, thank you for that, Kadrina. Kuko, all right. Maggie, we already looked at Roblox. Price was 68 today, option at 66. I'm not quite sure what that means, Maggie. Own a few shares now, but see the contracts are heavier at a lower price. Okay, still not, you want to sell the option. Okay, it makes sense. Thank you, you're welcome. What do we have down here? James, what are we selling right now? We're not selling anything. Mr. Contenders, okay. All right, can you explain spreads, zero risk trades? Uh-oh. I could, but I'm not going to. Sorry. Okay, let me show you something if you don't mind, real quickly. Okay, check this out. This here, okay, single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, synthetic, collar, butterfly, condor, iron condor, blah, 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 blah. Those are all the different trading strategies there are. I'm here giving you for free, no strings attached, a trading strategy created for a 9-year-old. Simple, safe, predictable, consistent, no way to lose if you do it right. 1% a week, which comes to 50% a year, and you're asking for more? Does that sound right? Now, don't get me wrong. I don't mind sharing. I'm okay with sharing, but I got to draw the line somewhere. I love spreads. I do. When spreads work, they're awesome. You can get 25 to 50% per week using spreads if you know how to do them. And no, I'm not going to explain how to do them here. Maggie, you're welcome. Dr. Jason, information is valuable. Thank you. Valsai, New York. Okay, Vaz, New York. Thank you. Thank you there, Vaz. Talmadge Robinson. Talmadge. I've met one other person named Talmadge. So you're the second person I ever met named Talmadge. Oh, he left. Maybe I insulted him. Who knows? Brian, how you doing? Christian, again, I'm not going to do the indexes. They just don't make any money. Don May, how are you today? JJ Thor, AGNC. Oh, man, didn't you hear me earlier saying I don't do AGNC? Okay, this is what I try to tell the other girl this, but let me show you why I don't do AGNC. Okay? You ready? J Thor? 0, 0, 0, 0, 0, 0. Do you know what that means? That means if the stock goes down, you cannot sell covered calls 2, 3, 4 strikes out of the money and get anything. So no, there's a lot of companies I don't do because there's a bunch of zeros there, and 0 means I can't get anything. So I just don't do them anymore. James McDonald, NYDY. What is that? Seriously, I have no idea. NYDY. NYDY. We cannot find that symbol. Now I tried NYDY, just as you printed it. Doesn't show up. Sorry. Argold. Regold. JCI. No. Who came up with that one? Regold. I don't do monthlies. Okay, monthly options, I can only trade once a month. Once a month means 12 to 24% by the end of the year. That just doesn't work for me. Sorry. James McDonald. And NVDY. That's a little different. NVDY. Yield Max ETF strategy. Okay, I already told you I don't do monthly options. March, April, May, August, January. No, those are months. I don't do monthlies. They just don't work. Kadrina Curry. Thank you for that, Kadrina. That's very nice of you. Strike Zoners Baseball, nice. Leslie, Amps. Amps? Is it AMPS or ANPA? Which one are we looking at? We're looking at two of them? Let's try Amps first. AMPS. Altus Power. No options, no thank you. ANPA, ANPA. Rich Sparkle Holdings. No options, no thank you. Now, Leslie Angela, there's 10,934 companies. Why am I looking at these? It makes no sense to me. It's at $1 last year. It jumped up to 180. Now it's back down to 13. That makes no sense whatsoever. What I'm looking for, Leslie, simplicity, predictability, consistency, profitability, and safety. That's what I'm looking for. John Bahay, back again. Good evening, good evening. RTX, I like RTX. It's going to be a no this week, though. Check it out. No this week. Not no, but no this week. The reason being, we're at the high of the year last week. Now you get your profit taking. Look at last profit taking brought us down to 194, and we're here now. So it looks as if this thing should be bottoming out any day now. Okay, she went up, topped out, pulled back. Went up, topped out, pulled back. Same spot. Almost 3 times. 1, 2, 3. So it looks like, hypothetically, John, it should do the same thing again. Up, down, up, down. Hypothetically, it should go back up again, but we need to wait for the bottom. Now, it's a low right here, but we don't know what's going to happen tomorrow. If you really like it, keep your eye open on it tomorrow. Could be. You just don't know. Jen Pinka, back again. Are you doing wheel? Once in a while I'll do the wheel strategy, but most of the time I don't. Okay, so Zachary, I'm over here, Zachary, waiting for you to tell me why I should buy Solano now. Because Solano doesn't have weekly options to it. So in your humble opinion, how would I make money off of Solano? Weekly money off of Solano, without sitting in front of my computer all day. What else do we got? Jen Pinka, thank you for that. Wrangler VA, are you doing the wheel strategy? Sometimes yes, most of the time no. Social Lily, good evening, back again, I see you. Mr. Washington, how are you today? Cribbo, okay, so will my 685 SPY puts that expire tomorrow pay? Why would I know that? I don't do SPY. It's not profitable. Now, what I mean by SPY is not profitable, and you do the 685 puts, well, it sure looks like it's going to be profitable tomorrow. Right? 693, 685 is way down here. It looks like it'll be profitable, but I don't do the SPY. SPY is not consistently profitable. Marco Yang, how are you doing? Voodoo, how are you? O'Reilly, good evening. Azriel, it young but with options with JP Morgan. The graph shows lower left to upper left, right for both. Thank you, Azriel. No idea what you're talking about, but okay. Old school trucking exit. 74. Okay. Aaron, thank you. Raz McKay, good evening. You're right. My bad. You are on point. Thank you, Azrael. John Bahay, awesome. RTX makes the Patriot missile, which are in very high demand now. Outstanding. Just keep your eye on it. Once it makes the move that you're looking for, and just make sure that it makes sense. Explains ratios like spreads and covered calls. Thank you. Poof! What's happening? Poof! Huncho Dadon. Huncho Dadon. How are you doing? Melberto Rosa. How are you doing? AGNC. We already looked at that. Wrangler. Are you doing? Okay, that's the fourth time you asked me that question. You only need to ask it once. Rich Scanyon. Good evening. Do you have a put channel, much like what you do with calls? I'm currently having better luck with puts. That's an interesting question. I didn't really look at it that way, because I could do a separate channel doing the wheel strategy, where you jump in and do sell puts first and then do the covered call. It's great, but I have no story that goes along with it. Here I got a story that goes along with it because my 9-year-old daughter wanted to learn. Okay, I didn't want to teach a 9-year-old the wheel strategy because that's a little complicated for a 9-year-old. You know, where's the high, where's the low? That's easy for a 9-year-old to figure out. The other stuff, not so much. But Richard, I'll take a serious look at that. Why not? I'm Wayne. Okay, I'm Wayne Ice. Good afternoon, Wayne Ice. Kenview. Like K-View, all right. K-V-U-E. K-View. Ooh, interesting. Check it out here, Mr. Ken. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, up. It's going up very, very slowly. 1877. The 1850s are going for 40. The 19s are going for 15. But take a look at this, Wayne. 0, 0, 0, 0, 0. So if you're right, fine. If the stock goes down on you, you have one opportunity. That's one strike out. Then 2 strikes out, nothing. I don't like those. Sorry about that, Wayne. Ambejus, how are you? Okay, Diego, we already looked at AGNC. Wrangler, that is the 6th time you've asked me about the wheel strategy. Okay? Davis, how are you doing? JTR, Advanced Micro Devices. Let's check it out. AMD, there we go. What do you think about AMD? Here's the high, here's the low. Look at the motion. Down, up, down, up, down, up. What's going on right there? Let's zoom in a little closer. Does it make sense? It either does or it doesn't. 30-day high, drops to the bottom, back up, back down, back up. What's going on right there? Well, the 210 is going for 860. That's over 4%. Mighty bargain. Correct, you did. Thank you for that. Dylan, Devo. What the hell is Devo? Okay, JTR. Why would you do the 217s? It's at 210. Are you buying the 217s? Or are you selling the 217s? I have no idea what you mean by that. No, I know what you mean by that, but I have no idea. Are you buying AMD 217 calls? Or are you selling the 217.50 calls? Dylan wants to take a look at Devo. We are Devo, D-E-V-O. We are Devo. Who remembers that song? Hey, Christopher, thank you for that. Oh, buy junk cars, buy police department. I have no idea what that means. Uh-oh. We're going to go back to here. Where are we? Where are we? Where are we? Where are we? Uh-oh. I missed all these questions. Uh-oh. Holy cow. I missed all these questions. Hold on. Hold on. Boy, there we are. Devo. Okay. So, Devo. What do we got for Devo? Hell no. Who came up with Devo? Dylan, sorry, I don't do monthlies and I don't buy at the high of the year. No and no. Spider-Man, what are some of the stocks I can do with this under $5,000 capital? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. Do you have a class for beginners? Absolutely, I do. DM me your number. I'll give you a buzz and we'll chat. I won't try to sell you anything, I promise. Angel's Bane, Alley. Isn't that... LA Bank. It is, Alley Financial. Unfortunately, I don't do monthlies. Okay, a monthly is an option that you can only buy and sell once a month. No, sorry. Travels by Tilacoda. Thank you. Bonjour. Ah, bonjour, bonsoir. Comment ça va toujours, eh? Thank you there, Mr. Big Mighty Bargain. Okay. Triple X, you're cooked, by the way. I have no idea what that means, but okay. Pip66, how you doing? This entire chat is a scam. Wow, thank you. I appreciate that. Let's see if we got this one out of him. If you don't mind, can you explain briefly why you think that? I'm not selling anything. All right, so hopefully I took care of that. All right, where are we? Sorry, I got to float through all these questions. All right, there it is right there. Freckle Queen, how are you doing? Tiana, how are you? Tom and Jerry, haha. He streams on 5 platforms at the same time. Actually, Wrangler, we're up to 9 platforms now. Derek, which company is that? That is Ally Bank or Ally Financial. James Rice, VGT. What is VGT? No, sorry. Sorry, James, I don't do monthlies. Rule 4, weekly options only. JTR, how you doing? Thank you. Ange31, thank you. Merlene, good evening, Merlene. How are you today? Thank you for that. Utilico, yep, we did Hertz already. Diego, we already looked at JAGNC. P. Everly, how are you doing, brother? Azriel, you're amazing. Don't let them duffs bring you down. You help so many people. Thank you. Azriel, don't worry about it. I'm used to a bunch of trolls. They say if you don't have enough trolls in your life, you're just not doing a good enough job. So I only got one tonight, and I feel bad about that. I need another troll. I need another naysayer. I need someone who says I'm doing something wrong. Blessed, good evening. Gigi, VVPR. What is VVPR? VVPR. Vivo Power International. No, I don't do monthlies. Do you remember why I said rule number 1? You should never buy something you don't understand. So if you understand it, you would know whether or not it had weekly or monthly options, and you'd also know whether or not it had dividends. So why are you asking me things that no? All right. User 22554412855522. Say by Friday you have 100 shares. After your call expires, do you resell another one option on Monday? Absolutely. Thank you, Azriel. Very nice of you. So 225544 whatever. Think about it. If you have a 100 shares, okay, and it doesn't get called away on this Friday and you still own it on Monday, yeah, you sell another one, and you do it every single week. Don't you run into weekend risk of causing the stock to take a big dive before selling a call? All right, now I'm going to say something and you're probably going to get insulted. Are you ready? There's no such thing as living life with absolutely no risk. There's risk in everything. There's a risk in me walking through that door right there and having the ceiling fall in on me. There's a risk of me sitting right here and have a plane crash right through the roof. There's risk everywhere in life. And yeah, it can go down. But remember rule number 1. Never buy something you do not understand and you do not want to buy and hold on to. It's just, why would you buy something if you don't understand it and you don't want to hold on to it? It just makes no sense. So yeah, you're right. A big drop could happen over the weekend. It could shoot up over the weekend. Either way, it's irrelevant because you have no control over anything other than what's in your head. Answering questions on weekly and monthly options trading. Thank you. All right. RJ, what's going on? Julius McKinney, how you doing? PJ Cajun, what's happening? Slim Jim thinks that's funny. I don't know what you're laughing at, Slim Jim, because there's a lot of funny stuff out there. What do we have down here? You're inverted for the viewers. Thank you there, Nick. Why do SPX options gain premium even it's not in the money? I don't do SPX. So you're asking me about certain things that matter nothing to me. Don't know, don't care. Okay, I don't do SPX because it's not consistently profitable. Remember, there's so many things you can invest in. I take one look. It's either profitable in doing what I want it to do, or it's a no. Pretty soon, it's no, because it doesn't fit. Okay, there's 360 something companies that do fit. So why would I be looking at something that doesn't fit? KO, HIMS been tanking though. Yes, I understand that. They're in the middle of a lawsuit. Until they get out of the lawsuit, they're probably going to keep going down. But here's the thing. Even though it's dropping, it's still paying me more than 2 or 3% every single week. So why would I care if it keeps dropping? See, I own, I think, 21 or 2,200 shares, some number like that. But it gives me more than 1% every week, even though it's dropping. I don't care that it's dropping. My concern is, am I making my 1%? Because I got the 2,500 shares or the 26, whatever it is. So it's still bringing in money, even though the stock is dropping. So don't panic just because the stock drops, because they all do. They go up, they go down. Take a look at this one. Okay, up, down, up, down, up, down, up, down, up, down, up, down, up, down. That's all they do. If you think a stock is going to come to your house and make you breakfast in bed or take the dog for a walk, ain't going to happen. They go up, they go down, that's it. Your job and your only job is to find a good company you like and buy it at the right time for whatever strategy you want to do. Now, the strategy I'm giving you here, simple, safe, predictable, consistent, 1% per week, less than 10 minutes a day, what else do you want? Think about it. What else do you want? What else do we have here? Niculator! Show us the same thing when the stock goes way up, please. When the stock goes way up, here's the something thing, Niculator. I don't know if you know this yet, but as the stocks go up, hold on. I missed some questions. There it is right there. So Niculator, as the stocks go up, so do the value of the options. And it gets to a certain point where it doesn't make any sense to hold on to the stock anymore, so you just let it go. So as the stock goes up, the premiums go up, and as the premiums go up and you're trying to roll forward, the numbers don't work, so you let it go. So when the stock goes up, you let it go. When it comes back down again, you jump back in. When it goes up, you let it go. When it comes back down, you jump back in again. It's a revolving door. Come on in, drop off some money, get your ass back out again. What's wrong with that? I mean, I jump in, I buy Ford once or twice a year. I buy General Motors 3 or 4 times a year. There's certain stocks I buy every single week, like Macy's. I'll buy it every single week because every single week it gives me money. Come on in, drop off some money, get on back out again. Tom, you're agreeing to sell them if it ends above the strike price, though, at a loss. No, Tom, not at all. Okay, see, Tom, what you're missing is I look at my stocks portfolio every single day. I get up in the morning, first thing I do, get rid of, let's go there, okay? First thing I do, Tom, all right? I take there we go, click right there, right there. First thing I want to do, Tom, I want to take a look at the high, the low, where was it, where is it, what direction is it going? Great. Now I want to take a look at the last 30 days. The last 30 days, oh, look at this. The 30-day high, it dropped. Now it's going back up. Great. What do I want to do next, Tom? What did I buy it for? What did I sell? Where's it at now? Where does it look like it's going? What should I do? That's it, every single day. So yeah, the strike price may be higher or lower than my purchase price, but what did I buy it for? What did I sell? Where's it going? What should I do? And what is the market maker paying me? Okay, so I'm in 8.5, I'm in at 13. I sold the 8.5s. Market maker's offering me 13. 13 is exactly what I paid for it. So yeah, I will push it forward. Okay, confirm and send. There it is right there. I'm buying back this one. I'm selling that one, the 850 for the 13. 13 is more than 1% what I paid for it. Yeah, there's my 1%. Push it into another week. Now, what you're missing, Tom, what you're missing, let's go back to there, right here. This is what you're missing, Tom. You ready? This is what I bought it for, $12.99. Now, I sold the 850s for next week. See, 6 March, 850. I sold the 850s for 61. So the break even for whoever bought this is 61 plus 850, which is $9.11. Great. Well, where's the stock right now? Okay, the stock at this moment in time is at 857. Well, 911 is way up here. And as the stock goes up, I will roll it forward even again, pushing it out of his reach. So I look every single day. What did I buy it for? What did I sell? Where's it at? Where does it look like it's going? What should I do next? I got 2 criteria. Number 1, consistency of profitability. Number 2, preservation of my capital. Tom, I'm 62. I have no desire. Welcome to Walmart. How may I help you? Will that be paper or plastic? Oh, that's right in aisle number 13. Can I get that for you? No, it's not in me. I have no desire to go back to work. The amount of money that I have created, that I have accumulated in my 5 decades of working. My first job was in 1974. First job, 1974. Some of you weren't even born then. I've worked 5 decades. The amount of money I've collected now is going to last me the rest of my life. So 1% a week works perfectly fine for me. I've been doing this long enough that I know what I'm doing. What did I buy it for? What did I sell? Where's it at now? Where does it look like it's going? What should I do next? 2 criteria: consistency of profitability, preservation of my capital. I don't want to lose. Okay, last year I did about 2,500 trades. I lost 4. 4 out of 2,500. I think that's pretty damn good. So loss doesn't come into my vocabulary. Rule 1, never buy something you don't want to hold. Rule 2, Tom, you listening? Rule 2, never, ever, ever, ever sell at a loss. I have no desire to ever sell at a loss. And you know what, Tom? It's not a loss until I agree to take the loss. Because if I buy it $857 and I sell it for $740, that's me agreeing to take a loss. Never going to happen. You will never see me on a video consciously agreeing to take a loss. I don't do that. Number 1, I never buy something I don't want to hold on to. Even if it drops. Remember, I jumped into, hold on, hymns. Okay, look at hymns. 70, now it's at 15. Now I jumped into hymns at 52, which is right there. That's where I jumped into hymns, 52. Now it's down to 15. Did I lose? No, I didn't lose. Why? Because I refused to sell at a loss. And the interesting thing about hymns, rid of that. Okay, here's hymns right here. Okay, now remember, I said I jumped in at 52. Okay, now, what were the 4 losses and what caused them. Okay, Outland. One loss was I hit the wrong button. I tell people that all the time. As a beginner, you're going to lose money by hitting the wrong button. That was one. $2,500, hit the wrong button. It was embarrassing, I'll tell you that much. So anyway, Tom, as I was saying, I'm in at 52. I dollar cost average, so now my average is around 35. 35. So 1% of 35 is 35. So how far out do I have to go to get my 35? 1, 2, 3, 4 strikes, 1750. It's at 1580, and I sell to 1750, which is right about here. I'm still making over 1%, even though the stock has dropped more than 50%. Okay, so yeah, I've been doing it long enough. I'm not worried about it. AGNC, where you looked at. Thank you, Diego. What else do we got? Tay, thank you. Tay Ford, we'll take a look at tomorrow. Yerden. I see British Petroleum has good dividends. Absolutely. We'll look at tomorrow. Money moves tomorrow. Chris, do you ever do the wheel strategy? Yes, I do. Gustavo, how do you know it will be 1965 max profit? What if the stock never hit that price for a long time? Gustavo, when I do a trade, you ready, Gustavo? Ready, Gustavo? Here's the trade right here. You ready? Buy 10 covered calls hymns, 6 March. Here's the strike price. Here's the purchase price. Maximum profit right there. It tells me exactly what my trade is. Okay? It tells me how much am I making, how much am I risking, what's the break even, and what is the marginal requirement. This is the order right here. Before I even send it, it gives me the opportunity to back out if I don't want it. So Gustavo, it's already right there. The computer already figured it out for me. Do I want it? Yeah. I'm going to buy it at the current price, $15.82. I'm going to sell it at $19.50. I'm going to pick up $3,900. It cost me $15,000. It's already there. Everything's there. So how do I know? Because the computer said so. I'm curious about the 4 losses. I'm not going to go into the 4 losses because then it's going to require me to go back into all the trades that I made last year and take a look at every single one. Yeah, I have no desire to do that. Christo, which software do you use on your computer? Okay, Christo, this is Think or Swim. It's not software, it's a trading platform. It's just where you go to make your trades. How many trades a week do you do? Oh my goodness, 7 accounts. I'd say at least maybe 100, 200 a week. That's a lot. Maybe, sometimes more. What else do we got? Gustavo, thank you. Yerden, okay. The Fit Nurse, is he doing options? Yes, I am. KJ Brown, give us your best ticker pick. Doesn't work that way. UBX Lucy, all right. Pat, thank you. Julius, how you doing? Coop, what returns you make on your weekly options? Roughly about 1.4% every week. How many real covered calls do you do a week? Didn't I just finish that? I got 7 accounts here and 1 account on Robinhood. Can you go over a little bit more about what a monthly is compared to what is desirable at weekly? Oh boy. Okay, Outlandish, hold on a second. Do you sell weekly or daily if you get your 1% and when buy back? Oh, interesting. I usually buy on Mondays. Okay, I buy first thing in the morning, Monday morning, because we have a trading group. We get together every day, 9 a.m. Okay, we go over 3 of my accounts. So you get to see me trade 3 different separate accounts. And then you can ask whatever questions you want. So you actually know why I am doing what I am doing. averaging 1.4% since January. Amanda, thank you. Thanks to you. Do you do this with your entire portfolio? If not, what percentage? 98% of all my money is invested at all times because I have nothing else to do with it. I mean, what else? I'm retired, so what else am I supposed to do with my money? Okay, it's not sitting in a bank. Hell no, it's sitting in the market, earning me money every single week. Okay, how do you know? Blah, blah, blah. We already talked about that one. Gary Stromer, how are you? Oscar's house, thank you, Gustavo. Mike Matters. Mike Mattern. What kind of manufacturing business were you in? Ooh, I manufactured artificial coral reefs for museums and public aquariums. I don't know if that makes sense or not. Let me see if I can quickly pick one up for you. See. Damn it. No. You know what? Tomorrow I'll come up with one to get a better idea what I do or what I used to do. Any recordings to watch later? Oh my goodness. Do I have any recordings to watch later? Oh, you'll love this one. Hold on. Okay, here's the website, The10MinuteTrader. Okay, right up over here, you got the little hamburger. Okay, here's all the trades for 2024, all the trades from 2025. Let's go to that one right there, 2024. The only reason I'm going here is to get to the YouTube channel. So YouTube channel right there. Are you ready for this? Who came up with that one? Are there videos later? Okay, Lafru. Okay, you ready? Are there videos? 1,700 videos on YouTube. And no, not a single one of them is AI. Every single one is me standing in front of the computer just like I'm doing right now. I've been doing this for quite a while. Okay, we got two lives right now. This one here and this one here. Now, when I say this was created for my 9-year-old daughter, right there, here she is right here.
Hi, and as you being part of my internet like company, which my dad doesn't let me go on that. That's what I do.
Okay, so that's the little princess 16 years ago.
Stocks that I'll be trading, and every month.
And that's me, 16 years ago when we first started. My favorite part's coming up. Hold on. You're going to like this. Watch this.
There's a different company paying out dividends.
Okay, the only reason I'm showing you that is I've been doing this for a while. That was 16 years ago. Look at all the hair I had. I actually still have this t-shirt. I do. One of these days I'll see if I can find it. I don't remember where it is, but I have it somewhere. So yeah, I've been doing it for a while. And my 9-year-old said, Daddy, can you teach me? Simple, safe, predictable, consistent for her to lose. 5 simple rules. Rule number 1, never buy something you do not want to hold on to long term. Rule number 2, never sell at a loss. It defeats the purpose. Rule number 3, make sure the company's consistently profitable. Rule number 4, weekly options only. And rule number 5, make sure all the numbers work. That's it. It's not that difficult. Adults have a tendency to want to make this more complicated than it needs to be. And the reason being, complexity stimulates the brain. Complexity stimulates your brain because you think you're smarter because it's more complex. I'm terribly sorry. Simplicity takes discipline. Because it's so damn freaking simple, you have to stop yourself from doing weird shit. So, Mike, I'll find the video of what I used to do. I don't know if you can find it. It's around somewhere. Hold on. See if I can do this. It should be somewhere. See, that's all the other people's stuff, not mine. Where the hell is mine? It's kind of aggravating they use my name, because I came up with that name. Well, anyway, I did stuff like that. I did artificial coral reefs. You know, that weird stuff like that. I probably should do it. Look at this, $3,700 for that. You should see mine. Mine's a hell of a lot better than that one. But I'll have to show that to you another time. All right, so what other questions we got? Luis, thank you. They contract. What do we do if the price of the stock goes down? Number one, Luis, you don't panic. Hey, great content. What do we do if the price goes down? Oh, Gustavo. Why is it you and Luis said the exact same words? I'm talking literally the exact same. So Luis and Gustavo, hey, great content, exclamation point. What do we do if the price of the stock goes down? Exact same. I find that strange. APH tomorrow. Gary, thank you. Just beginning to study options. Really interested. Thank you. Christopher Hall, Hut. Let's take a look at tomorrow. Merv Atkins, hello. Let's do this up tomorrow. What else we get? Gary, looking for reading material to look into, anything to refer to. Gary, believe it or not, I've written 15 books on the topic. 15. Okay, Lucid tomorrow. Christopher, sent to heart, thank you. Daniel, thank you. Bruce, I need the beginner class too. All right. Oh, yeah, if you don't mind. Yep, Riley, I like Riley. Billy, I need the beginner's class as well. Okay. How many real covered calls do you do a week? Your 4 losses, can you write them off your profits? I don't even worry about it because I don't pay taxes. What's your break even on HIMS? It's a good question there, Mr. Rob. My break even, I honestly don't know. Because see, I own the stock at, I think I own it at 38. Okay, so I originally jumped into HIMS back in December at 52. I dollar cost average at 38, dollar cost average some more at 34, and I dollar cost average some more at 16. So now my dollar cost average is 24.62. So that's my break even at this moment. Now, if you're asking me how many premiums I've had come in on him since I bought it, let's get rid of that. Let's go all the way back to that right there. Okay, so who came up with this one? Rob, are you ready? These are all the trades that I did on HIMS, okay? Credit, 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 credit. Whoops. More. Look at all of them. Okay? So yeah, I have a lot of credits on HIMS, which means I've been doing it quite a while. I have no idea what my break even is going to be, nor do I care. My major concern is How many shares do I have? I got 22. How many do I freaking have? HIMS. 1,800. All right, so I got 1,800 shares. Now, 1,800 shares of HIMS, how much is it going to give me every single week? Well, this week, we got the 18 sold. The 18s. Okay, next week, it might be the 18s, it might be the 19s. I just don't know, nor do I care. My concern is HIMS bringing me in money every single week? And when you say break even, you make it seem like I'm going to sell them for less than I paid for them. That ain't going to happen. I don't care what the break even is. My concern is, if I'm in it at 38, am I bringing in 38 or more every single week? That's my intention. Cootie, Google, we'll look at it tomorrow. Oh, you mentioned Ford earlier. Does it look good now? I'm tempted. We can look at Ford tomorrow. Okay, user 2968. That's a little more than 15 minutes a day. Thank you for your answering. No. 15, I'll show you what 10 minutes a day looks like. Are you ready? Okay, DVN. First thing I want to look at. Whoops, DVN. View trades. There it is right there, DVN. DVN, there it is. It's going to cut. Okay, there's the high, there's the low. It's coming down. No, thank you. HIMS, we already looked at this one. Okay, here's the order coming down, bouncing off there. Great. What did I buy? What did I sell? It's right there, not a problem. Next, Mara. Rolling order. There it is right there. Mara. High, low, was, is, up, down, up. It's 857. Where am I? The 850s. What's it trading at? 16. Yep, I'll take that 16. That's it. And then last but not least, Oracle. Same thing. Okay. High, low, was, is, down, up, down. 147 to 147. I got 150. Oh, it's paying 4. What is that? Is that right? 455. Yeah, I'll take that. Send and send. There you go. Less than 5 minutes. I just took care of that one account. Depends on how many accounts you have. And no, when teaching it is one thing, doing it is another. Because when I'm doing it by myself and I'm not talking to the computer or trying to explain why I'm doing things, it goes a lot quicker. Tomorrow, APH, Meta, hell no. Jaderman, what is your average DTE? DTE. You're gonna have to explain to me what DTE means. All right, because I have so. Ooh, Enza. Enza's in the house. What's happening, Enza? Thank you, Anon. Jessica, thank you. Samuel, thank you. Bags of rutabagas. Bag of rutabagas. Okay. Thank you, Enza. Hey, what's your full name so I can look up your book? Christo, how are you today? Christo, it's right in my website. Just go to the website. It's on the website. All right, what are we looking at? Can you do covered calls with less than 100 shares? No, you need 100 shares. Sorry. Anon, easier said than done. Absolutely. You mentioned Ford earlier. I like Ford, but we're not going to look at it now because we're past my bedtime. Earlier said than done. All right, you got that one. Pooch. All right. Enza, thank you. How much money do I need weekly to do this? Don't pay taxes. How does that work? Uh-oh. Junk car buyers in New Jersey. All right. Junk car buyer in New Jersey. Here's something for you may not have thought of. All right. Now, taxes. Here you go. Are you ready? Hypothetically speaking, I could put all my money into my corporation's pension fund trading account. Number one, it's in a pension fund. It can't be touched by anyone. Number two, the money can't be taxed until the money's taken out. Number three, the taxes on a corporate account is taxed at the corporate level. And profits on a corporate level can be offset by losses of another corporation. So playing the tax game, you got to talk to a tax strategist to help you out. You say, hey, I don't want to pay taxes. How do I do that? And they will show you how to set up your account. Number one, you set up your account in a state where there's no corporate taxes. So in the state of Wyoming, I think it's Wyoming or Montana, there's no taxes on corporations. In Delaware, no taxes on corporations. There's a lot of states where there are no taxes on corporations. So if your money, if your trading is in your own personal name, no, that's the highest taxes possible. You want to put all your money, I'm not telling you, I want to put all my money into my corporation's trading account because there's no taxes in the state of Delaware on corporations. That's how I pay no taxes. How much money I need to get started? Pooch, I can't tell you that because you are different than me. I'm already retired. So my money has already been, tabulated for my 50 years of working. Super Trucker, what do you do if the price drops on the shares like from 15 to 13? Do you still write covered calls? Absolutely. Every single position that I have brings in something on a weekly basis. Now, every week, I don't get 1% on everything every week. You see me tonight. Sometimes I make 3 or 4% on some, and sometimes I make less. So let's take a look. Okay? So what do we have this week? We have DraftKings, 4.4. We've got Tesla, 2.9. Owl, 4. Coin, 5.2. AVGO, 6.2. Yesterday, KHC, Kraft Heinz, 2.1. Costco, 2.3. Hertz, 10%. Yesterday, we found that yesterday. Pfizer, 1.6. TSLL, an ETF, 4.6. Monday, Mara, 10%. Hood, 6.2. Bristol Myers Squibb, 1.1. The Metals Corporation, 4.1. QCOM, 1.4. Something Energy, so BE Energy, 5.2. Hormel, 2.5. What else do we have? Oh, over here. Oh, this is a couple of weeks ago. SPGI, 1.5. Citigroup, 1.7. ADP, 1.9. BE, 8%. Now, NOW, that's actually a stock. NOW, now. Now, NOW. Okay, now, 3.2. IBKR, International Brokers, 2.8. SPGI 2, what do we have over here? What's this one? Ooh, Schlumberg, 1.5. Intuit, 1.3. Caterpillar, 1.9. Harley Davidson, 2.6. SMR, 4. Bed Bath & Body Works, 2.5. Meta, 1.7. Google, 1.9. Tesla, 3.3. I got a whole bunch of these things. Every single day, I'm here. Twice a day, once in the morning, once at night. This is all I do. I don't do anything else because I'm retired. Well, I am working on a couple of boat projects, but that's besides the point. So yeah, stocks go up, stocks go down. I just don't sell if they go down on them. Okay, thank you. Daniel, what stock has been your best consistent winner? Macy's. Not a doubt, Macy's. Okay. Do you off a very beginner video? Absolutely. Pronto not. Send me a DM. I'll give you a buzz. Now, for you guys that are new here that want more information, send me your number. I'll give you a call. DM me. Okay? For you guys on TikTok, simplest, easiest. You guys down here on YouTube, simple, easy. DM me your information. I'll give you a call. I don't text. I don't email. I don't Snapchat. I don't WhatsApp. I don't Telegram. If you think you're talking to me in any one of those, you're not. There are, last I checked, 65 people pretending to be me. So if you're carrying on a conversation with me, you're not. Unless you pick up the phone and actually talk to me on the phone, you're not talking to me. That's the only way I talk to people, is on the phone. P.S. Thank you for the content, I may add. Gent car bars, not a problem. They lied and people died. Hood, they haven't been around that long. You're absolutely right. And Hood doesn't even have dividends. Somebody asked, I took a look at it. What time in the morning? 9 a.m. Sorry, but the 9 a.m. is a paid group. Okay, so we actually trade live, and that's a paid group. And the only reason it's a paid group is because I want you to have skin in the game. It's not that I want your money. It's got nothing to do with it. Okay, you don't hear me trying to sell anything. I don't try to sell anything. We're all adults. We know how it works. The morning group is a paid group, and it has a, what do you call that? A Discord that goes along with it. Okay, and we look every single day. All right, that being said, we seem to be all done. What do we have down here? Have been tanking. Yes, I know that. Obey, how are you? Oh, Obey, VOD, we'll take a look next time. Highlight Hound Goat. So puts on RTX, I didn't say that. Did not say that at all. Please, prayers, serenity. So what does the paid group cost? Oh, see, I don't try to sell anything. Okay? DM me, I'll walk you through it. Now, I'm not going to try to sell you anything when you DM me. I just want to have a conversation to see if it's right for you. It's not right for everyone. It's slow. It's boring. We do the same stocks over and over and over and over and over and over and over again. Is it hard for a beginner to afford covered calls at 100 shares? No, not at all. You guys seem to forget one thing, and I try to repeat it every night. What I'm showing you here for free was created for my 9-year-old daughter. Simple, safe, predictable, consistent, 1% per week. 10 minutes a day. It's called the 10-minute trading strategy for a reason. You get in, you take a look at your positions, great. Next. That's it. What did I buy it for? What did I sell? Where's it at? Where does it look like it's going? What should I do? And the paid group is basically say, hey, James, what's going on here? Can you help me? That's why we're here. I like to pride myself and say, that's why I'm here. Okay, that being said, I'm out here for the night. What else we have down here? Me too. Uh-oh. The 9-year-old could learn the condor. Yeah, no. She's not 9 anymore. She's 26. 2008, she was 9. So 2008, she was 9. She said, Daddy, can you teach me? Okay. You can at least give us a ballpark what we need to make that decision. Anywhere between $25 and $500, depending on how much you want to do. Okay, more involved I am, the more it's going to cost you. Less involved I am, the less it's going to cost you. But basically, you want to know that's what it is. All right, that being said, you guys have a great day. We're done. Gotcha. All right. See you guys over here. See you tomorrow. End meeting. And here. Bye, guys. See you later. Bye, guys. See you later. Just turning up all the cameras. Microsoft, look at it tomorrow. What's this about? Henry, how are you today? Henry, what we're looking to do here is simple, safe, predictable, consistent, 1% per week using nothing but pre-qualified dividend stocks to do a covered call just before the dividend is paid because stocks have a tendency to go up just before the dividend is paid, and knowing when a stock's going to move just before then allows us to get a simple, safe, predictable 1% per week. That's 50% per year. That's what we're doing here, Henry. Have a great day, Henry. Good night, Ernie. Highlight Hound Goat. It's not a scam. He's giving up free advice on your tickers. Thank you there, Highlight. What's this live about? I'm trying to get into trading and stuff. Okay, Madi Pod. Okay, hold on. I'm going to answer you guys in a minute. I'm going to say bye to everyone else first. So guys, don't go anywhere. I'll be right back. Okay, that's done. That's done. Cool. Okay, you guys have a great night. We'll see you again tomorrow. Tomorrow, we'll see you tomorrow. A whopping 3 cents. I think that's funny as hell. I'm on here live for 3 hours. 3 hours. I make a whopping 3 cents. Hold on, I'm going to show you this. You ready? Watch this. You ready? Okay, this is TikTok right here. See what that says right there? You made a whopping 3 cents. A whopping 3 cents for 3 hours of my time. This one over here was only 1 penny. That's horrible.
So a 20-year-old can't have alcohol, but a 5-year-old can pick their gender?
All right. What's it live about? Okay, Madiposes. Okay. We're investing in dividend stocks, specifically dividend stocks that are consistently profitable, higher and higher and higher profits every single year. That's one of the main requirements. The company's got to be profitable for at least 2 decades. That's 20 years. So what we want to do is buy them just before the EX dividend date. That's just before the company pays a dividend. So just before the dividend, the stock has a tendency to go up in value. So as the stock goes up in value, we want to jump in and do a simple trade to grab 1% predictably, consistently, every week. That's over 50% per year. That's what we're doing. What